Are you interested in understanding the concept of P/E ratio in the context of investing? Then you are watching the right video. Welcome. The price-to-earnings ratio, abbreviated as P/E ratio, is a key indicator in financial analysis used to assess the valuation of stocks in the market. This indicator helps investors and analysts evaluate whether a company's stocks are overvalued or undervalued compared to its earnings. P/E ratio expresses how many times the market price of a single share is higher than the earnings per share that the company generates. Calculating P/E ratio is simple. Just divide the market price per share by the earnings per share. For example, if a company has a P/E ratio of 15, it means that investors are willing to pay 15 times the earnings generated per share. A higher P/E ratio may indicate that investors are willing to pay a higher price for each dollar of earnings, suggesting higher expectations for the company's future growth. Conversely, a lower P/E ratio may indicate that the stocks are possibly more affordable but could also suggest lower expectations for future growth. However, a low P/E ratio doesn't always mean an attractive investment, and conversely, a high P/E ratio doesn't automatically mean an unattractive investment. All investors should combine P/E ratio with other indicators such as earnings growth, competitive advantages, and macroeconomic factors, which we will discuss some other time. To better explain the P/E ratio number, let's take an example. If a company's stock is priced at $100 and the earnings per share for you as an investor are $5, the P/E ratio would be 20. In summary, P/E ratio can assist you in selecting stocks by providing an estimate of your future earnings when you invest in a company's stocks. It can help you distinguish between stocks that are highly overvalued and those that are undervalued. P/E ratio can be your final indicator in the selection process. For instance, if you want to buy stocks from the automotive sector and can't decide between several companies, you can use P/E ratio to determine which company offers the highest earnings. Alright, that wraps up today's video. If you want to further educate yourself in the context of investing and success, don't forget to visit our channel. You won't regret it. We guarantee the quality of our content. We look forward to seeing you again in the next video. Bye.